Welcome. Good morning, everyone. Welcome to Recovery Season 2, The New Normal. I'm your host, Alain Kapata-Shungu. And in this episode, I'm really excited and thrilled to speak to a leader that has served as a 3-time CEO, notably in companies like Realtor.com, but also Dobbs Company and Shutterfly. He has many hats, and we're going to have the opportunity to talk with him about some of them. So as a board director, but also as an investor, to name but a few. He also has an incredible level of expertise as it pertains to very various ranges of companies like in the internet space or e-commerce or media, entertainment and consumer product companies. And today we are really thrilled to be able to speak with Ryan O'Hara. Ryan, how are you doing today?
I'm great. Thanks for having me on. I appreciate the chance to talk.
Absolutely. This was a personal treat for me, as I've been really looking to speak with Ryan for years now. So I'm really excited to have him on the show. So the first question that we're gonna get us started, Ryan, is as a CEO, a president, board director, investor, I assume you must be in the know pretty much about what's happening in the industry. So from trends to technology, leading Realtor.com, can you maybe speak to us a little bit about some of the opportunities or trends that you see, that you observe, that could actually encourage realtors in these tough times?
Yeah, well, thanks for having me on again, and we'll be able to cover a lot during the podcast. You know, a couple things. I think one thing that really changed in the pandemic that I wouldn't have predicted was, we started in a really tough place, and everyone kind of sheltered in place. Yes. And I think home became more valuable than ever. And people were spending even more time in their homes than before, and their family was with them, and sometimes the grandparents, and the home became this cocoon to really live through the pandemic. And I think it had a big shift on the real estate business in general. I think, before the pandemic, what was really happening all over the globe was that big cities were getting bigger and stronger, and housing prices was really rising there, while it was weaker in a lot of the rural areas and smaller cities. Absolutely. And I think the pandemic actually lifted all boats. So if you look at what's happened, the cities still have robust real estate markets, but smaller cities and rural areas have actually grown, and people can work from anywhere. A lot of people want a second home to escape from the cities. And so, I think one thing that's really shifted is, in addition to low interest rates and everything that's driven the market, the fact that home has gotten even more important than it was before makes the whole industry more important, and it makes real estate agents actually matter even more. People's decision on where they live and which home they buy has never been more important, and it actually lifts the whole industry and makes agents, who I know you service, really important in their communities and for people. And so I think it's in a strange way, it's elevated real estate.
Absolutely, completely agree with that, and especially what you talked about early on as it pertains to home being more and more important, because pre-COVID we were just getting there and pretty much having some sleep and then going back out. And now I completely agree with your assessment there. Like, everything happens from home, and it definitely makes sense now. And even in Europe as well, you're seeing people leaving big cities like Paris to go down south because you have space and garden and things of that nature. It completely makes sense. To kind of continue on upon that, Ryan, can you now describe to us, if possible, what is your quote unquote typical work day? What is or what was the typical work day during this crisis, pretty much?
Yeah, it really changed the way I worked. I always was a very early morning person. I would wake up earlier than the family. But before the pandemic, there was a lot of things to do to kind of get out of the house and get to the office. So it was making breakfast and taking my kids to school, and I would go to the gym, say 2 days during the week. And all that went away. So I kind of reoriented myself so that I still woke up early, but I would do my best work, or my thoughtful work or creative work, 6:30 to 10 or 11, and really use that time and not surf the internet or read all the newsletters or do the kind of information gathering until the afternoon or the evening. And so I shifted the way I worked, and I really like it, and I think it's a way I'll continue. I'm just kind of a morning person naturally. I found that's sort of my best time. Also, a lot of people I deal with are already up in New York or Europe or other places, so starting early actually benefits the whole communication pattern.
Absolutely.
So that's for me. I over time always put a premium on only being 10, 15, 20 minutes from my work. So even in New York or LA, which are brutal commute markets, I would always wire my life to have my job and then get my housing near where I worked. Same with Silicon Valley, where I am now. Okay. So it doesn't impact me quite as much as others, but I know people I've worked with and people I talked to, they've changed their commutes from an hour plus in those 3 cities to 0 by working from home and got back those 2 hours, some of which they'll put into work, some of which they'll put into life. So I think there's dual impact that people have seen. I felt some of it, but I didn't have the commute burden that many people have.
Yeah, absolutely. I love that 15 minutes that you just talked about. I think it's really paramount when you talk about just being productive. Like if I go out of home, I want to make sure that when I get to work, it's really that close. And I'm not going to drive like 45 minutes, 1 hour away to get to home. And then you have to think about the commute back. So I really like that 15-minute window. I think it's awesome.
Yeah, so, I always find when you're driving long, 45-minute drives to and from work, you're trying to save a few minutes here or there. And it's not stressful, but you're trying to game the traffic. And it's just mental cycles that could be better spent elsewhere. So that's why short commutes are better.
I completely agree. In your opinion, Ryan, what's the one thing that you believe has been overlooked by the industry in general, real estate industry, and that COVID pretty much highlighted or validated as an undeniable demand? Like this is now something that will remain and stay. What is that one thing for you?
I think before there was sort of a resistance to letting people see homes until they were willing to go in person. And it was partly to meet those people as potential clients. It was partly to show the house in its best form. And I think the pandemic really changed that. I think you always had things like Matterport or iPhone videos available, but they hadn't taken off. And we played with them at Realtor.com to a degree, but hadn't fully leaned in. And I think the pandemic forced it. Like, homes were still trading, and there was buyer and seller agents, still doing work, but they needed people to be able to see these homes in a different way. So I think it's accelerated remote viewership of homes in a major way. I was a board observer at Matterport, and so I got to see their product. But there's Matterport, there's others. But I think that sort of ability to see 20 homes really easily in your comfort of your own home, and then go visit the 3 you think make sense. It's really efficient for everybody. It's efficient for the home buyer. It's efficient for the seller who has to show their house so often. It's even efficient, I'd say, for the buy and sell side agents, that someone can take, my wife and I can look at 20 homes, narrow it down to 2 or 3, really know those homes by the time we get there and hit the ground running. We're kind of a better client that way. So I think that's one kind of huge shift. I also think buying with one click has sort of accelerated. So there's just more and more people are getting used to buying cars with, digitally, or booking. Travel's been here for a while. I think it's going to keep happening with homes. So you're going to see over time, people are willing to transact and get mortgages and do everything else just fully digitally, rather than have to interact and have a lot of friction in those 2 processes, buying a home and getting a mortgage.
Absolutely. This is to kind of continue on the trends that are emerging in the industry. I did recently see this NAR report from based on technology, where they were saying that pretty much realtors are really, really into drones now and cybersecurity and things of that nature. And I was wondering, what are you seeing on your end as it pertains to trends and technologies? What are some of the things that you're really interested in and passionate about as it pertains to the real estate industry right now?
Yeah, well, I'll rattle through a few companies I find
absolutely.
Some I'm just a fan of, or I've seen they have real traction.
Absolutely.
One I invested in was Curbio. Curbio is a U.S. company, and it's pretty interesting. Basically, if you're a homeowner and let's say you have a $350,000 home and you're selling it, you have some equity in it, mortgage on it. And normally you would show the home well by changing the furniture, making it look nicer. But let's say you have a problematic bathroom or kitchen. It's going to cost you $20,000, $30,000. And you don't want to reach your own pocket and take the risk on that money. What Curbio does is they do the work for you and get paid at sale. And so the reason it works is the consumer doesn't want to take the risk on the investment. The realtor's all for it. That Curbio works with realtors. The realtor wants to make the house look great and get a great price. The reason it works is if you're willing to put a little bit of money in your home in a real way to fix a problem, you'll get a return on that investment. So you'll get a 2, 3, 4x on that $20,000 investment when he sees a great house with the kitchen fixed. So just an interesting model. It's like the time's right for it. It's a very operational model. You got to manage the plumbers and the carpenters, and it's very operational on that side. Yes. They're good at it, and they get better with scale. And other people have had problems with trying to figure it out. So I really like Curbio.
Okay.
Divvy Homes is another one I think has a really bright future. I mean, what's interesting about Divvy Homes is there's a huge number of people in the United States that can't afford a down payment that they need to get a mortgage. And it's a shame, but it's reality. So what Divvy does, the model is you rent a home you really like. So they help you find a home you like. Divvy will own the home, and then you pay a rent every month. Some of that rent goes towards paying for the rent. Some of it goes towards the down payment. And it's sort of a forced saving mechanism. Think of it like a 401k or a Roth IRA. It makes you kind of get to live in a great house, but then you're also saving some money. And then you can, at the end of a couple of years, either buy the home and you can get a mortgage, you're on your way, or you can cash out and you can take the money that you put into the side and with you somewhere else. So you're not totally locked in. So it's just another example of an interesting model that lets more people aspire to home ownership and get into owning a home, which I think is super valuable. I'm still a big fan of Realtor.com. I'm a little biased. I kind of bleed red, but
yes.
CEO there for 4.5 years. It was a great acquisition by News Corp, and Robert Thompson, my boss, kind of took a risk on it. And I really liked it. It was, it's a really good, where Zillow has a dual mandate now. Zillow is trying to be a great portal and generate leads, but it's also trying to buy buying. Realtor.com is really focused on being the best for consumers and to really just show everything. They're even showing lots of iBuyers. It's really an open. So even since I left, they haven't missed a beat, and I think they're doing great. So I really root for them a lot. Internationally, I guess iProperty is a great company. iProperty is sort of an East Asian portal.
Okay. Okay.
They just SPAC'd, and it's a really, I think it's gonna be a really good company longer term.
Awesome.
In your neck of the woods, IAD is a great brokerage.
Yes. IAD. Yes.
I think we'll cover brokerages hopefully later in this. I'll give you some of my takes overall, but
absolutely.
I think ID is like a hot company. In the US, Side is on fire. I wish I would have invested in Side. Side is basically a partner with really experienced agent teams. Yes. So if you're an agent team and you're not affiliated with a big broker and you choose to pick a different route, Side is the back end and the partner. They help with recruiting, training, commissions, and they get paid with a percentage of the commission that's capped. So Side in the US is I have a family member who's a realtor, and she just swears by it. And I think it's got incredible momentum. REA is sort of the gold standard I think it's people call it the Zillow of Asia or the Zillow of Australia. It's really more than that. Like, they do even more than Zillow does and service customers in even a great way. And so, Owen McKibben and Tracy Fellows before, they just had really good leadership, good energy. So I think REA internationally is a great move. It's kind of like Right Move, but even more broad. And then the one other organization I'll hit on that I had unique exposure to it, and it's not a company, but it's an organization, is the National Association of Realtors.
Okay.
I think it's an awesome organization. Like, I got to see upfront what they do. And what I liked about it was the realtors that got involved with NAR and participated in a lot of the leadership things they do really loved it. It reminded me of, I was in this group called YPO, Young Presidents Organization. It has some similarity to that. Like, it feels greater than yourself. It's beyond just your company. You might move companies, but you always be in the NAR. Absolutely. And I saw the people that did it really loved it. I saw what they did in the US for protecting realtors' interests, whether it's politically, they were good on cybersecurity, on safety, on training, just a really good organization. I thought that was, really, really good. Bob Goldberg runs it and is the CEO, but they have elected leaders each year. Charlie Oppler's the gentleman today, and they get elected by the realtors themselves. So they got a nice balance between professional management and then elected leadership. Agreed. So anyway, I think NAR is also really an interesting entity, and it does incredible things for agents. It protects commissions, makes sure everything goes well state by state. It's really good.
Absolutely, completely agree with you on that. And I had the pleasure of having Bob as well, like a few months ago. So he talked extensively about some of the measures, and I was, just like you said, really, really impressed, because I felt like even though nobody could have definitely anticipated what happened, but by April or May of 2020, he already had something going on as it pertains to its member and what it means for them and how they can still continue to reach out to their customers. And they completely went like full on training and building new tools and making those accessible. I think that the way that that association is run, I concur. It's an unbelievable. I think it's just another testament to Bob's leadership, and as you said, to all of the people that are also in a leadership position doing that amazing work. I think it's an amazing association.
Yeah, it's definitely, like you said, it's an institution. I mean, it's been
absolutely
powerful for decades, and they have local leadership and national leadership.
Absolutely.
It's a great group. And then the last one I'll mention is, I really respect Offerpad. Offerpad's one of the leading iBuyers, and I joined the board with them. And Brian Baird, got a great team and a great CEO, and it's in the right place. Like, there's a lot of growth, as we mentioned earlier. There's going to be a lot more people buying in a simple way, buying and selling simple way. So I think Offerpad's really well positioned, and there's sort of real estate DNA that I like they're ex-brokers and agents.
Okay.
And so they're true like real estate. They didn't come at it from a tech angle. They came at it from a real estate angle. And I like being part of like the traditional infrastructure of real estate.
Absolutely. I love what you just said there, because I feel like what we are seeing now as companies that are succeeding or being successful are those where their founders are coming from a real estate angle and not from the tech angle, more often than not recently. Because I feel like they can actually relate to like what people are needing on the field, what's missing out there, and it's really interesting to see that trend kind of being more and more popular out there, because it's the same pretty much for us, because we started as agents and now we're building companies because we saw a lack for something that we've been searching for the last 5 years and never been able to kind of find it. And I love to kind of see where brokers are now getting into the tech business and really building something because they felt like it was missing. And I think that's really interesting.
And do you think part of that is a lot of the people that are going in to be brokers and agents are more digitally savvy because they're under pressure, so they're more comfortable playing in both spaces?
Agreed. Completely agreed. To kind of continue on that, speaking about agents, Ryan, what advice would you give to a realtor starting in the business right now, in the middle of this? I don't even know how to qualify it. What advice would you give to somebody starting right now?
Well, I'd say if they're starting right now, coming into the business.
Yes, in the business right now.
So I'd say a couple of things. I would say one, really own your local market. So the most important thing an agent can do is just be really good in the zip code they're in, or the 5 square miles they cover. So I think it means getting really knowledgeable about all the housing stock in that market, knowing the streets, knowing the schools, knowing the traffic patterns, knowing the climate issues, just really knowing the local market matters. Staying on the local theme, I think ingratiating yourself into the local community is critical. So doing parent-teacher association, coaching football, soccer teams, being part of the local government, volunteering to be part of the community events. I think being seen as a local icon is a strong word, but a local player really matters. Like, people, when they're picking an agent, a lot of it is because who they know, who they see, knows their stuff, but also is a good person. So I think being in local matters. I think being at open houses, like I think the 6 hours you're there meeting customers, 1 out of 10 will ultimately be someone you'll transact with, but it's a great way to meet people, learn the community, everyone starts to know, one another. So if I was a young agent, I would raise my hand all day long to help the more senior agents man open houses and take advantage of that. I would do local ads on Nextdoor and local print and kind of get my face and brand out there. Try to differentiate yourself. Like I have a great agent named Judy Citron, and citron I think in French means lemon. Do I have that right?
Yes, absolutely. Yeah. Absolutely.
So she does this whole thing around lemon. So citron, lemon, and lemonade. And she has this yellow theme, and it's really a great branding exercise off of that. So if you have something unique about your name or your look or whatever it is, like leaning into that and differentiating and having a brand, I think is really valuable. You got to have a great work ethic. I think just working smart, but working hard and long, and making sure you're giving it at 95% each week. I think is important. I would say when you're picking a brokerage, I mean, we can talk about brokerages now.
Yes.
You want to pick a brokerage that kind of fits your style. So some of the traditional brokerages are better at longer term training and kind of holding your hand more. Side, it's great, but you wouldn't go to side unless you were more advanced, I'd say.
Absolutely. Agreed.
But there's a lot of good choices. Like, there's the digital brokerages. EXP is digital here. I know in your market, it's IAD, and IAD's on fire. IAD is an interesting one, and they're both digital and face to face. But IAD for our European viewers, which you service, I think is a great thing to look at. They start in France, but they're going all over Europe quickly. And just got a big investment from a private equity firm, and Goldman Sachs lent them a bunch of money. So IAD is going to be on a growth tear. In the U.S., there's two models. You can either go, there's a bunch of models, but you can either go with the traditional Realogy. I really like what Ryan Snyder's done, and I think Realogy's going nowhere. It's just a strong, robust company.
Absolutely.
Compass is kind of, sexier and hotter, and Robert Rifkin has that coming. So that's a choice. Yes. And then the other model for startup people that people look at is, you can look at Remax, which has a pretty cool model and lower fees, lower cost, good training. So long story short, finding a brokerage that kind of fits your goals and your style, get a sense of them. And I even think you can go watch YouTube videos of agents from these different brokerages, and they talk about why they like this brokerage versus that versus another. And you can kind of get a sense of what feels good to you. I wouldn't just go to the first brokerage where someone says, hey, come join my brokerage. I would do some work. Absolutely. I guess the other advice I would have is, and you'd be great to talk about this because I know you guys do a lot of great tools for agents. Yes. But I think it's good to do a lot of research on the technology you're going to use. Exactly. But my recommendation to people is do the upfront work, think about it a lot. But once you pick a piece of technology, really learn it, stick with it. Don't second guess yourself and just go with it. Exactly. So example, you pick a CRM, like a SaaS software, you run your business as an agent, pick the right one, do all the work, but whatever you pick, then go all in, learn all the features and functions, be supportive of it. Don't try to kick the computer every time. It's not easy because they're all hard, but I think and I feel like on lead gen too. So on lead gen, I say to people, rather than have a couple leads come from Facebook, a couple from Zillow, a couple from Realtor.com, a couple from Nextdoor, whatever, pick the one or two that work for you, and then spend more with them and learn the system and maximize it, optimize it. And rather than playing too many technologies, pick a couple you like. And even if you're right or wrong, it doesn't totally matter. You just got to use what you pick well. Absolutely. So I guess those are three things: is pick a brokerage that works for you, own local. And then when you pick your technology, be smart up front, be analytic, pick the right stuff that you think works for you, but then really leverage it and get into it.
Those are really, really great advices. Definitely. So this is a more personal question to you, Ryan. What are some of the lessons that you have learned during this pandemic that you could share with us today? This could be on a personal level. This could be on a professional level. You wear so many hats. So what are some of the things that you've learned about yourself lately that you didn't know before the pandemic?
Yeah, for me personally, I had more time to think about real estate in a lot of different ways than before when I was, either running a company or managing different businesses. You're just focused solely on that. Exactly. So what I've learned a lot about is I've been able to talk to a lot of different capital sources on real estate. So while real estate's really local and it's expanding and growing as a large total addressable market, there's a lot of capital sources investing in real estate from all angles. So I'll give you a couple of examples. Like at the really large side, there's Blackstone and BlackRock, which have both said real estate's going to be part of our go forward portfolios. Yes. And so an example is, Blackstone has this thing called BREIT, which is a REIT, and they're raising $2 billion a month in new assets that they need to deploy. So they have 50 billion in so far in assets, plus they can lever. So they need to buy a lot of product to invest that money, and they only get kind of paid when they invest the money. Okay. So they bought Home Partners of America. They're looking at big acquisitions that they can deploy into real estate, and they like real estate because it's not as volatile as equities. REITs have tax benefits that are interesting. Holders of REITs can put it in tax deferred accounts and do really well with them. Yes. So BREIT's here to stay. It's a monster, and they're going to continue to invest into residential real estate with that vehicle. Blackstone's sort of similar. On the other side of the scale, you have a lot of venture activity now in prop tech. You have the traditional iconic venture capital firms like Andreessen Horowitz or Sequoia or Menlo Ventures that are investing in prop tech. Absolutely. And then you have these boutique, they were boutique, now they're large funds that are really prop tech only. So that's Fifth Wall and Zig Capital. Zig Capital sort of similar to Fifth Wall, but in a different way. So you have these, bespoke venture firms that are investing in real estate. And so there's just a lot of capital all over, big acquisitions, small acquisitions, VC. So my learnings have been that real estate's the second biggest category in the world and the US behind healthcare. So it's just a large category. And so there's a lot of capital trying to figure out, the best ways to deploy. I think I'd say is, in an inflationary environment, real estate's a great place to be. Rents can get passed on in an inflationary way, or commercial real estate can withstand inflation, and REITs are well protected. They pay high dividends and have to by law. So, you end up getting income as you go. That's pretty predictable. Yeah. So I think the real estate in an inflationary environment is going to do really, really well. So I guess my learnings have been on the investing side, on the debt side. There's a lot of debt funds lend into real estate. I've just learned a lot about the capital structure and the capital sources going to real estate, and they're plentiful.
That is fascinating. That is definitely fascinating. So in your opinion as well, Ryan, do you think that this hiatus that we are going through or went through forced our industry to reimagine how work gets done? And if so, how, in your opinion?
Well, there's obviously more digital and more at home. I think we're trying that. I think it's got more diverse. I think the work from home environments let people participate in the economy in general and in real estate in particular. So I think it's gotten more diverse. I think it's the pandemic sort of made real estate more important. And so if you're a realtor, you should feel really good about what you're doing. You're helping upgrade their lives, and you're helping communities get stronger, and you're helping, a great house makes the parents happy, the kids happy, the grandparents happy. So I think it's made it even that much more important. And everyone's looking for a profession where they have some passion and they feel good about what they're doing. And it's hard to find. It's really hard to find with all the different types of professions and jobs. I don't know, maybe a third are truly where you're helping other people and you're feeling good about it. 2/3 are things that need to be done, but they're jobs. I think the real estate world and industry and agents, what they do really matters and makes an impact. So you're both, making a living for your family, but you're also helping people's lives, and that's pretty rare. So I think it's a gift for the industry that way.
Wow, that's awesome. This is to kind of close us out. This is another personal one. What are some of your, actually it could be personal or business goals that you have for the remainder of the year? Some of the exciting projects, the things that you are working on right now.
Yeah, that's a good question. I'd say a couple of things. I'm a board member now of 3 different firms, so I want to do good work for the 3 boards and continue for them to grow and do great work and support the management team. So I'm enjoying that. Awesome. I made 4 investments. I looked at a lot of things. I made 4 investments, and I picked investments that would move the needle for me personally. So I made 4 investments. I looked at probably 15 things. And so I want to keep open to that and keep looking at things that I think look relevant or interesting and where I can add value or add capital. And so I still want to do a couple more investments. And then I'm open to doing another operating role where I run a business or invest in a business and run it with other people on the real estate ecosystem. So I think it's just a really fascinating time in real estate. And, I'm not necessarily in any kind of rush. Warren Buffett had this great quote about stocks, like you want to be active and listening, but you don't want to be in a rush to buy. I feel like that on operating jobs in real estate. So I'm just being very, very coy and patient. And then, I think that the real estate industry right now is really dynamic, and there's a lot of things changing. It's going to be interesting when interest rates pop up here, which they will. Will the markets come back down to earth? They probably will, but there'll still be lots of transactions. Absolutely. And then on the personal front, I played so much tennis. Pandemic. What happened there? Basically what happened is my son started beating me. And I wanted to stay with him. So I was taking lessons off to the side. I was playing him twice a week. Played so much, I hurt the tendons in my wrist and had to have a full surgery. So I want to get this thing better. and then I want to get back on the tennis court and the chessboard and try to beat my son in both. He's better than me now in both. I have twins that are 11th graders, and so it's really a fun time.
Oh my God, this is unbelievable.
So I'm spending a lot of time with my twins, but I want to get my hand better so I can beat my son.
That's awesome. That's what competition looks like, by the way. See,
right.
that is real competition there.
It's strange for me because my father was a great Olympic volleyball player, and he actually rooted for me to be better than him. So I kind of remember the time I beat him about 9th or 10th grade. And my son is now past me, and I love the guy. So I'm rooting for him to be the best he can be, but there's still a little part of me wants to beat him,
Yeah, I cannot be mad at that. I definitely am, because you still have that, you are a competitor. That's what you do. So it's not something that you can switch on and off, right? It's just it's always there.
Yeah, so it's healthy. I think it's healthy for society to have people want to do their best in whatever they choose.
I love it. I really love it. This week's recovery episode with Ryan Roy is now done, but you can catch this episode on YouTube and on all platforms streaming podcasts as usual. And remember, in the recovery, don't just get back to the same place, but always strive to get to a better place. Thank you, everyone. Ryan, it was a real treat for me to be able to connect with you. I really appreciate your time today.
Thanks for having me. It was good to be here, and I love the energy. Good session.
Absolutely. My pleasure. So the way it's gonna go is we're gonna have it queued, and I think in the first week or second week of September is gonna go live. But obviously, I'm gonna send you and get in touch with you to let you know when the episode is live, and then when it's live, we'll just send it to our list of agents. We have 680 of them today, and those guys are just the top of the tops as it pertains to their field and what they do. And it's really exciting because I think that the product that you mentioned there, I think is going to be helpful to them because they're going to be able to go and check them out, which is awesome. And that's literally what we created this show, was to kind of find ways to empower those guys as we go through this pandemic. So that was a real treat for me. So thank you for all of that.
Yeah, that's great. And when you do post it, I'll also post it to my social network so we can
absolutely
send it around too.
Absolutely, right. So do something about that hand first, and then enjoy the rest of the day.
Yeah, thank you so much. I really appreciate it. Thanks for reaching out to me originally and making this happen.
Absolutely, it was my pleasure. I really wanted to have this talk with you. I've been in San Francisco, and I love what you did at your tenure at Realtor.com. I think it was fascinating, and so when I was there, I was emailing, and I was like, man. One day, I hope we're going to be able to speak to Ryan. So when I had that opportunity, as you can see, I didn't let it go. So I'm really, really happy that we finally get to do this. This is awesome.
That's great. Well, thank you so much.
Absolutely. Have a great day ahead.
Have a good rest of the week and weekend.
Absolutely. Thanks, Ryan.
Thanks a lot.